Not often.
Should I start? I mean, I'm happy to get involved. Is it going to be the next pickleball?
No, very antiquated. Nobody's playing that game. You know what I'm seeing? I'm seeing more bocce though. Places I go.
Bocce.
You know what I'm saying? I just found out I'm going to Foo Fighters tomorrow. They're at City Field.
Oh, nice. That's awesome.
They just got rained out last night.
I think they got rescheduled for tomorrow. Or is there another one tomorrow?
They're running the concert back.
Yeah.
Tomorrow.
I don't know. I just got a text message. Do you want to see? Don't know.
So,
I just got the text.
So Adam was there last night, and there were thunderstorms.
It was
and
bad.
It was really bad. There were like rolling thunderstorms, and they like halfway through the show they called it, which I've never heard before.
I was at a different show at Lincoln Center. They did the same thing. It's the lightning.
Yeah. It's the lightning they're worried about. I don't know how many songs they ended up playing, but
awesome. I want to go.
People online seem pissed.
You can go.
Oh yeah, of course.
Still tickets available. My friend just got.
Oh, I got to talk to the wife.
Have you ever seen Foo Fighters live?
I saw them in 2003, maybe.
It's one of the
2004?
one of the best shows I've ever seen.
It was a Foo Fighters Weezer show.
Ooh.
Amazing.
Teenage me was.
So I saw the Foo Fighters the first show back to Madison Square Garden during the pandemic.
Oh, that must be awesome.
Was that Chappelle came out for that?
Chappelle sung a cover song of "Creep."
Yeah.
Did a Radiohead cover, but that was cool because everyone had a vaccine card, and it was the first time they brought back a concert, and there was not one person in a mask in the whole building. Because you had to get
It must felt liberating.
It was so cool. You had to get the New York State vaccine card to get access to the building.
Right.
So I took my son and I went with another guy and his kid. And I'll never forget like just how weird it was till all of a sudden
He's surrounded by people.
I want to say this is like March of 21, maybe.
Yeah.
And I still have the commemorative cup. It says The Rock is back. And it's like Foo Fighters, Madison Square Garden, and the date on it.
Is it unfortunately a collector's item?
Yeah, well,
unfortunately, it's a collector's item.
I drink beer out of it, so.
What was your first live event post-COVID? Remember?
Wedding or something? I don't know. It's that whole year and a half time frame is like a blur to me.
Yeah.
It's still weird as shit
weird.
when you
It's
think
very weird.
when you think about it.
You know now everything is 5 years ago, pretty much. Like anything pre-COVID is 5 years ago.
The whole thing felt like a blur. And my older son was 1.5 years old at the time, so that was a shell shock. Having to work at home in an apartment, with him, who's just coming into
life,
walking, body, all that stuff. So,
and that's right. So one of the weirdest things that I remembered the other day, they used to do this thing where, okay, the restaurant is open, you can go. They put tables in the parking lot. They enclosed it in plastic. You could sit in there. That's fine. That's safer than sitting in the regular dining room.
Yeah.
Something to do with ventilation. Okay, sure. But then it was like you had to wear a mask to walk into the restaurant. And you check in with the hostess. Then you sit down at the table. Everybody takes off their masks. Everyone at the tables next to you, their masks are off. Maybe the table's a little bit more spaced. And then the waiter comes over. The waiter is pulling down the mask to tell you what the specials are.
Hey, we've never had a COVID before. It's our first time.
It was just
next time we'll be much more better equipped.
It was safety theater, basically.
I don't want to do that again.
No, it'll never happen again.
No, please, no.
They'll literally never do that again.
All right, well, we still do it. The biggest safety theater bullshit is on airplanes when the stewards have to read, like, in the event, if a plane's going down, we're all going to die.
Right.
But they have to do it.
Stewards.
They have to do it.
What are you traveling on the Titanic?
The stewards. What are they called?
Flight attendants?
Oh, I didn't say stewardess because I know that's not.
Oh,
you can't say that anymore.
They'll
said
put you
steward.
in cancel jail.
Flight attendant.
I have books for you.
Let's go. What do we got?
Okay. Because as a thank you for allowing
Were you
me
giving
to-
us gifts already?
You're welcome.
All right.
No.
All
This
right.
one's for Nicole. I was told Nicole's a Rangers fan.
Nicole.
So this is a Mark Messier.
Oh, that is so
Oh.
sweet.
I love it.
Look at that.
I can't read this on the beach.
What is it called?
No one wins alone.
No One
Hopefully
Wins
it's
Alone
good.
by Mark
I
Messier.
hope it's not a
Mark
snooze
Messier.
fest.
By Mark Messier. Wow, looks
Mark
good.
Messier.
Hey, Nicole, you want me to sign it for you?
Yeah.
Okay.
My
All right.
favorite Ranger.
What else you got?
I got you're welcome. Thank you. This is I was laughing about you guys talking about the JP Morgan 5K.
Yes.
This is a running book
Oh, okay.
from a
Yeah, throw that right out.
Who's that for? Me or Josh?
whoever wants. I didn't
My-
know. That's more of a joke. This is actually a very good book. Which, I don't know if you're familiar with this. This is a gentleman.
Josh will read that. Josh will read that.
I'll 100% read that. I love that.
He worked at Ritholtz and Le Cuckoo.
Okay.
And there's some hilarious stuff in here. It's
All right.
very
This is
good.
called Your Table is Ready.
Table is ready.
Tales of a New York City maitre d'.
Yeah.
All right. Let's have it.
This is good.
Let's have it.
Give this to Matt or something.
No, this is for Michael's. Michael's already training for
What
the
I talk
next
about
race.
when I talk about running.
He's a. I've never read any of his books except for that one. He's
This one?
some sort of writer, yeah. But
A brilliant meditation. You know what?
it'll get you
maybe
inspired.
this will be my on-ramp to get back into books.
Oh,
I've
you
really
gotta get
just
back
been in
into
a
books.
massive drawdown.
I told you that was going to happen too. Remember I told you? Wait till your kids turn like 3 or 4.
Well,
The
what
reading
you
is
didn't
over.
tell me is wait till you do 4 podcasts a week.
Well, yeah, that'll definitely do the trick. I would agree. I would agree. Todd, you were here on the show not long ago, and you said some things that turned out to be really right. So this is super exciting. We're gonna celebrate all of your amazing calls. How's the summer been so far?
Summer's good.
Yeah.
Telling Michael about his trip to Spain
Yeah.
with my wife for a friend of ours' wedding. So that
Okay.
was nice.
What do we think about destination weddings? Are they selfish?
Well, I did one myself.
Oh.
In
So
Saratoga
no.
Springs, though. So not Mallorca, Spain.
Oh,
but
that's Saratoga Springs is not quite. I mean, that's
Here's my thing with destination weddings. Shut the up. Go to the wedding. Stop complaining. Spend the money. Get on the plane. Go do the thing. And in 5 years, you're not going to remember how much it cost for you to be there. You're going to remember that you were there.
I went to one.
What if it sucks?
What if
Oh,
it sucks is a great question.
It was an amazing wedding.
It's really hard for it to suck. Where would a destination wedding have to be for it to suck?
Saratoga Springs.
Yeah. Besides that, wait, why did you get married at Saratoga Springs? Just to get everyone together?
Well, that in New York City was too expensive.
Okay. All
And
right.
so we just came across to Saratoga. We liked the venue.
Did you come down the aisle on a fucking thoroughbred or something?
Well, we did the rehearsal dinner at the Horse Racing Hall of Fame,
Oh, okay.
which I know nothing about horse racing.
Okay.
But that was cool.
Yeah, dude, I think that stuff's cool. I didn't do one, but when I hear a lot of people like, "Oh, how dare they?" So don't go. If
Don't
you
go.
really don't want to go, then you probably don't belong there.
Don't go.
Oh yeah, if he got invited to a destination wedding right now, he'd be
No, I wouldn't
hemming
go.
and hawing.
No, of course I wouldn't go, but I wouldn't be walking around crying about it.
No, you just wouldn't go.
No,
What about? So my brother got married at Walt Disney World.
Wow.
To go to that.
I'm into that shit. See, there's another thing people make fun of, and I'm into that shit too. Why did they get married there? Was his bride a Disney adult?
I know Nicole likes Disney too, is what I was told.
She does.
From my sources.
She does.
We're a big Disney family.
Okay.
Sohn family is.
Yeah,
very
I
into
love
Disney.
Disney. I wish my kids were younger. I'd go back right now.
Let's go.
It's funny you mentioned that. I think I'm going back next April. I said that to
should.
Robin last weekend. Do you want to go back?
Well,
go.
how old was Logan the first time you went? 1 year old?
No, we went in California a couple months
Oh,
ago.
all right.
But they're going to age out soon, so
It'll never age out.
yeah, they will.
Trust me.
No, they will. How old are your kids?
5 and 2.
Okay,
Yeah.
trust me. they do not want to go with their
I will
parents to
age
Disney
out.
World.
I will age out too.
Here. My parents just celebrated their 50th anniversary.
Yeah.
Okay, it's great. We love them. They went to Disney World.
Okay. All right. I love it, dude. I'm all about Disney. I want to take my son back because he was 5 when I took him.
Do.
So what? He doesn't remember any of
They
it.
got a whole Star Wars thing there.
And now he's 15, so it's not going to be quite the same. But
They did a lot of adjustments the last 10 years.
they've done some adjustments.
A lot of money.
All right. I only will go on rides that nah, you know what? Let's not go there. All right, let's get the show
Wait,
started.
what?
No, this is going nowhere good. Hey John, what show is this?
This is Common Friends episode 150.
Ladies and gentlemen, today's show is brought to you by NASDAQ. Did you know over 600 ETFs are now listed on the NASDAQ exchange, including this new one from STF Management I'd like to tell you about today. Option overlay ETFs have exploded in popularity. People are using them as a source for alternative income, but most of them are based on a stock index. The STF Tactical Growth and Income Fund is very unique. First of all, the ticker symbol, TUGN, T-U-G-N, literally stands for Tactical Growth and Income, but what they're doing is using a rules-based approach to toggle between stocks and bonds when the market trend turns negative. Tuggin turned 2 years old this summer, has paid 24 consecutive distributions of roughly 1% per month, currently has an 11.4% trailing 12-month yield. To learn more, visit stfm.com or just click the link in the show notes. Oh, yeah. 150. It's a milestone. What is all the pointing?
You'll find out.
Don't distract me. Todd, 150 episodes sounds like it's a lot, right?
Mazel tov.
Yeah, I think quite frankly, we've gotten better as we've been doing the show.
Yeah.
And honestly, the last few weeks, the last run that we've been on, I feel have been really solid shows.
You're on a hot streak.
Yeah, no, we really hit our stride. It took a couple of years to figure out the formula. What do you think?
Yeah, I think you're getting decent.
I'm almost decent. All right. Hey, we have a special guest today. Mr. Todd Sohn is back, returning champion. Todd is an ETF and technical strategist at Strategas Securities and Strategas Asset Management, an institutional research and asset management platform. Welcome back, Todd.
Thank you very much.
All right. I have all this other stuff about prior to Strategas, but we don't need to do that again.
No, thank you.
Can I show you something that I thought was funny?
Of course.
All right. Hey, put this on screen. So this is a meme this week. Jerry asks, Kramer, what's going on in there? And it's all the largest cap stocks, blood red. And Kramer answers the door. He says, they're rotating into small caps, Jerry.
This is a big meme week.
It's a huge meme week. Okay, what's the most entertaining part of what you're seeing happen on the screens?
That small caps were being asked if they mattered anymore.
Yeah.
Josh asked if they were investable.
Are they even investable?
I'm part of that crowd too. Like, do they matter at this point when you have NVIDIA and Microsoft? And then they just have this explosive move higher. And it's not like they're down a ton, but some of these big cap names are finally mean reverting.
So, but it doesn't mean they matter. It's just cool if you own small caps to see them go up a lot.
That slice of your portfolio is actually doing something.
Yeah, but not just doing something, it's drawing capital away from the mega cap trade.
Yeah.
Like undeniably, right?
I think, without definitively saying yes, I mean, there's clearly money going there. And whether that's real money or short covering money, it's something. It's demand.
Right.
But when we say money is coming out of large growth, it's not large growth managers going into small caps.
No.
It's model portfolios, perhaps.
It could be models. It could be short-term algos. It could be retail traders saying, all right, I'm trading out of large cap growth. I'm going to rotate. You know, you're simple. And you can do that with 1 or 2 clicks in an ETF, right?
Yeah.
So it's not going to be these Goliath, Titanic type managers who are moving this because the mandates, it just doesn't work like that.
Did you see what went on with like the regional banks this week, for example?
Yeah.
Huge moves.
QABA, it's a community bank ETF. Huge move.
Yes.
Enormous.
Yes. I want to talk about some of the things that you said the last time that you were on the air. So what you did, I thought was really prescient, just obviously like given what happened. And honestly, most people were basically looking at this portion of their portfolio like it would just be forever dead money. And it woke up this week. Let me play this.
You have a chart showing that this is the 4th longest streak without a new high in the Russell 2000.
Yeah.
What are bears going to say if that makes when that makes a new all-time high?
Let's double click on this. I love this.
So you talk about bear markets and how bad they've been, right? How desolate. And Russell's getting up there in terms of length, right? The bar is really low for small caps.
What's the numbers? This is the 4th longest bear market for the Russell?
It is 1, 2, 3. Yeah, 4th longest consecutive days without a new all-time high for the Russell 2000. That's
so
how bad
it's so bullish, though.
Terrible it's been. Yeah, the bar is super low for small caps to work. Maybe they're not an outperformer by a huge margin, but these numbers, we're getting into extreme territory in terms of
should I just blindly buy
We don't-
small caps right now for like my higher risk tolerance bucket?
I like it, yeah.
But the 600 over the
Are you
2000.
but are you PGing it?
Ooh, with the 600 over 2000.
What's the because I'm asking you, what's the historic after it comes out of a period like this? How good are the returns?
Oh, you know what?
Just eyeball it.
I mean, they look pretty good. I don't have the exact numbers off the top of my head.
I feel like it's going to be really good.
But it should be good.
And all these bullshit regional banks that everyone's so worried about, they're just going to shrink in They're just going to shrink in proportion to the good small caps.
There's this interesting evolution going on within large and small cap indices where the banks are shrinking in Russell 2000, the industrials are taking share, some tech, some discretionary.
Let's just play the whole
healthcare.
Just
the whole thing.
All right, let's replay the whole episode. So, do you want to take a bow? You want to do like a
no.
Want to do a little karate move?
What do you want? Karate. Cobra Kai's out, by the way.
I know.
Was your dad a karate instructor? Or was that somebody
he still is.
Yeah, too.
Yeah, he's a sensei.
And what belt are you?
I never got that far.
Okay. Is it true that you won the All Valley?
I did.
You beat Daniel Lewis?
I've read Ralph Macchio a couple of times.
Okay.
And just tie this together. He's a sensei who goes to Disney World, all right? I mean,
fair.
It's a rare combo.
So listen, that was a really prescient set of charts that you had on the topic. And this snapback, the question now is like, is this for real? Can we now say that there is a new trend, or is this just counter trend and we're all going to forget about it in a week?
The breadth statistics say this is new. This is a fresh move higher. You had 70 or 70. I want to say 75%. I might be skewing that number of Russell 2000 stocks trade to a 1 month high this week.
Wow,
that is historic.
Yeah,
right. The strongest in however many years.
It's a breadth thrust. A breadth thrust. No, but it is though.
This is a breadth thrust.
Yeah, you want to buy those.
Yeah, breadth thrusts coming off of major lows, which you could make the case the Russell is in the process of doing that, should be bought. Yes, they can be short-term climactic, right? I wouldn't be surprised if small caps then just declined and had some volatility for the next month or so, especially because seasonals, elections, whatever you want to call it. But more often than not, the forward returns are very bullish.
All right, wait. What's the first? Did we skip to this?
I skipped it because we talked about it.
All right, so we're not going to do long time coming for small caps.
We can. That's one that we just spoke about.
Whatever you want.
I want to put this one up really quickly. I want to ask you a
This
question
is a
about
fresh update of that chart.
Yeah. So this is the chart that you originally showed us, and you said, "Look, this streak has been going on for too long, basically, and when it snaps back, it's going to snap back hard," and that's what happened.
Yeah.
Okay.
So far.
So what's the aftermath of these periods like?
You get a huge run higher. Of course, there's going to be some volatility. There's going to be pullbacks there, but I'm inclined to think small caps are back. Now, here's the important part. Okay, so the absolute part of this is small caps are in participation. That's great for the overall market. Can they outperform large caps? That's a little trickier because
for 5 days they
for
did.
5 days. I'm talking like 6 to 12 months if you're an asset allocator.
Yeah, I would love to know if you think they can.
Usually, that's only the case coming out of recessions,
which is not the case right now.
This is not the case, so it's a little uncommon. So I don't know how I feel about tilting overweight small caps, but if I'm just analyzing the market, participation, what's going on, this is great.
Are you guys getting calls from institutions that want to take a fresh look at their small cap allocation?
It's everyone this week.
Everyone. So what do they want to know?
Is this for real?
Okay.
Is it short covering? Of course, there's a low quality tilt to this, but that's what happens during these moves when you get these big volatility spikes higher.
Yeah, of course, the highest shorted stocks
all
will
the
be
crap
the biggest
rallies.
gainers.
Yeah.
Okay.
And when crap rallies off a low, crap should rally off a low, right?
Yeah.
Junk. That's how things happen.
Yeah.
And then you skew up quality as the cycle ages.
I think Abraham Lincoln said that.
That's a big Abe Lincoln
So
quote.
wait, so they're calling you, and then they're like, "Well, what's the right way to play it? Is the right answer as simple as Russell 2000 and shut up?" Or
I think S&P 600 is a better construction. Russell 2000 still has so much junk in it.
Fine.
I also like the active route, and even prior to this move, if you looked at some active managers out there, the ones who are really good at their job and no small cap stocks, they've actually done pretty well because they were skewing towards industrials and not towards regional banks or the boom and bust biotech type names.
Okay.
So I think if you have a good active manager you're comfortable with for small caps or S&P 600 makes the most sense.
Okay. And then there's a read through to the S&P 500 when small caps are doing really well. You almost don't mind being outperformed in large cap because large cap should be in a healthy environment,
I mean,
right?
Large caps have had their due the last year and a half.
Yeah, what else do you want?
Been phenomenal.
Right.
And the other part of this, though, is it's been large cap growth. There are so many corners of the market that haven't done anything for 3 years.
Right.
So now you get small caps going, you get financials going, industrials have been there, healthcare, we'll see if that's actually sticky depending on where you are in the cap
They look
scale.
good, though. Healthcare looks good
I
right
think
now.
it looks good. And so if I'm taking the optimistic case here, I think this is very much an optimist market right now.
Okay.
There is a lot of room to run for anything that is not a top 10 stock, let's call it that.
So we're going to get some of your charts, but I should point out as we're recording this Thursday afternoon, Dow's down 500 points. I'm a big point queen.
Russell's
so
down
I
2%.
pay attention to that.
I think it's to be expected, right?
Yeah. Biggest 2-day loss for the Russell since
huge.
sometime. I can't remember what the data was.
This is a volatility period. That's when trend changes can happen. And this one seems to be from bear to bull for small caps.
Yeah, my theory on the Russell 2000 sell-off today is like everyone woke up and was like, wait, what did I just buy?
Yeah. It's a huge short-term momentum trade. Let it breathe for a couple of days. Maybe there'll be a little shakeout. People get nervous. Oh, it was a fake out.
I actually wouldn't trust it if it ran up another 10% right now, like without taking taking a breath.
Yeah. I mean,
I'd be a seller.
So, Bespoke tweeted the Russell 2000 gave up a 4% gain it had from Monday's close through Wednesday at 10 a.m. So, all right.
Small caps, it's volatile.
Yeah.
It's to be expected. Yeah. But I go back to that new high data, the advancers, the decliners ratios, all this stuff has the breadth thrust written all over it.
Yeah.
And you can get pullbacks from those in the very short term, but longer term, 6, 12 months, it's really bullish.
You know, one thing though, like that I would love to know, was there any way to see this coming? So we think that this happened as a consequence of the CPI print falling in line, and then obviously clarity on the election happening like almost overnight.
Yeah.
Neither of those two things are predictable per se.
Right.
Even if you knew the reaction would be what it was, you still couldn't have come up with both those two events happening.
A huge gain like this, I'd be hard pressed to say.
No,
see it.
Even if you thought that there was going to be a cooler print, you probably piled more into large caps.
Yeah.
Right?
Yeah. Probably buy more tech.
Stick with what's working.
I would have thought, I would buy the stuff that's working, the momentum stuff,
right?
Not small caps because they've just been so frustrating.
So the Russell has underperformed big time off the lows relative not just to the S&P, but to its own history. So you have a chart showing the Russell 2000 performance 1 year off major lows, and it's well below the average.
Yeah, so big move that we were just talking about. And if you're saying, all right, this is too far, too fast, well, you're way below average.
Oh, wow.
Other versus other major market lows, especially...
Look at this compared to 2020.
Yeah, I mean, 2020 was super rare. Obviously, it's the best ever.
So read me these numbers, not everything, but like the average return for the Russell off of a 1 year major low, which is what we think we just witnessed. The average return, how many? This is 200 days out, 250 days out.
1 year, 1 year out.
Okay, so 1 year out. What is the average return?
I mean, you're looking close to 60%.
And we're carrying on about what, 20%?
Yeah.
Okay.
We're nowhere near average.
Nowhere
below average.
Nowhere near the 2020 example. What is that?
You were up, I want to say 100-something%.
It's a double.
Yeah.
Okay. All right.
That was really uncommon.
Really? No, of course. But this idea that it's too far, too fast. Well, yeah, it's pretty fast, but it's not that far.
Too far, too fast if you're a day trader.
Yeah.
But if I'm a big allocator or I want to buy something for the next year, we're nowhere near too far, too fast.
Okay. One monkey wrench in that is Michael and I both believe that things are just faster now, and moves are sped up and down. So it is possible that like we've seen the lion's share of the gains, but I mean possible.
Well, another big monkey wrench is that like usually when you get a major bear market low, it happens in the context of a recession, which we did not get this time.
No recession.
And so there's a weird dynamic happening that happened in the market last week that usually occurs at bear market bottoms. So we're looking at the S&P 500 versus the New York Stock Exchange Composite Index, and we're looking at a rolling 5-day average of the net advancers. And what just happened this week, as you can see on the chart, happens at major bear market bottoms. And obviously we're not even close. We're not at a bear market. We're at all-time highs. So this is a very odd move that we just saw.
Strange tides.
Very strange.
But playing devil's advocate, it is kind of a bear market for most stocks that are not in the S&P 100.
Yeah, so that goes back to the point here. I mean, look at the NYC composite on that chart.
Yeah.
Shit's weird.
Outside of the last, I mean, if you had to zoom in, outside of the last few months, it's been a lot of nothing.
Yeah. Yeah.
A whole lot of nothing.
If you're not in the right stocks, it's basically been like a bear market.
Right, and that's why you've had this weight influence over the last year and a half or so of these stocks that just became colossal heavyweights in the index because everything else was doing nothing.
What are flows like in terms of small caps? Are investors interested at all?
So over the last 6 months, there has been what I felt kind of agnostic flows. Of course, you're going to get your drip into standard Vanguard type products and whatnot, but the fast money wasn't there. I don't believe so.
What's the red line in the top pane?
So that is just the S&P 600 relative to the S&P 500. Right?
Okay,
so
that's the ratio.
underperformance, yeah.
Okay.
We also have the S&P 600 by itself, And on the bottom panel is all small cap ETFs. There's a couple hundred of them, and the flow is over a rolling 6-month time frame. And I'll put little standard deviation bands on it to make it statistically significant. And over the last couple of weeks, there's been outflows.
Yeah.
There's just no interest there.
So there's still, on a net basis, it's still outflows.
Yeah, at least tactically.
Yeah, I don't think that'll, when do you get the new data? Next week?
We get it every day. So there's been money into the IWM, this Russell 2000, pretty substantially these last few days. I think probably short covering to some extent, and then fast money.
Yeah.
But bigger picture, I don't believe there is a lot of aggressive positioning in small caps. So that leaves a lot of room to run. Kind of similar to the last two elections in a way, 2016, 2020.
Yeah.
Right? The election gets cleared no matter who wins. And all of a sudden, this big rush of money to small cap value, all that stuff.
I feel like early 2017, everything rallied, and a lot of small caps participated in the quote unquote Trump trade. There was like it was a run.
It was that was the lowest volatility year, I think, of all time, maybe.
2017 was an amazing year. Yeah, absolutely. Let's do this commonality chart. So you're looking at multi-year bear markets. What's the story that you're telling in this chart?
That be optimistic outside of tech, that there's a lot of stuff that has been in a bear market for almost 3 years.
Okay, so the top pane is the equal weight S&P 600 index.
Yep.
Has not eclipsed its 2021 high yet. Middle pane is equal weight financials. Same story, although better. Bottom pane, equal weight healthcare. Basically, a consolidation for the last 3 years has done nothing.
Yeah.
Okay.
I think this is really getting overlooked. This,
not by me, I'm all over it. But say more.
For our clients, viewers, whoever, this idea, along with the idea, which this is in hindsight now, is that when you make an index of the Mag 7, they went down 50% in 2022. That's a generational decline for those stocks. So now they've rebounded. And so I like the idea that you're going to get major broadening out, and these sectors could go on big multi-year runs after this huge.
You think about how many retail investors have to for the first time look up Merck, and and
Pfizer
and Chevron, and they don't know these names. They don't know what makes them tick.
So if I'm just looking at participation, which is how bull markets work, that's the durability of it.
Yeah,
I am very optimistic with this.
Can you envision in a scenario where the large cap NASDAQ tech names have made their highs for the year, and then for the next 6 months, it's everything but? Could that continue through the end of the year?
I think that's fair.
It's hard to imagine.
It's hard to imagine just the way things work.
Yeah.
Maybe the lag, relatively speaking. If everything's going up, it's hard for me not to think okay, those will also go up, just the way the world works now.
We're going to get Netflix earnings today. Large cap tech starts, I think, next week. And then maybe that'll be just the reactions to those reports might be decisive.
Yeah. I mean, that was the case 24 years ago, the tech bubble, where you had big tech go down. Everything else was sideways to highish. I mean, you were there for that. So I don't think that's a good comp. But that did happen then.
I guess the point is that it's possible. It's just that's not a likely outcome.
I just feel like market structure is so different now.
Yeah.
Without being an expert on market structure.
All right. So to sum up though, basically it's not too far too fast.
Yes.
This probably has legs given the breadth that you're seeing.
Exactly.
These things are underowned. They're underappreciated.
Very underowned.
I think expectations are pretty low too. Just in general. And historically, this thing follows through.
It should.
Yeah.
If this is a head fake, it's going to be a painful head fake. Because then if the big names can't meet their expectations, those collapse and everything goes with it.
If this doesn't follow through, I'll never buy a small cap again as long as I live.
Oh, yeah.
I'm just kidding. I don't think the stakes are that high for people, but it'll be a nasty head fake.
In terms of people being underinvested, you have a table showing all the ETFs, not all of them, a lot of them that have yet to exceed their November 2021 high in terms of assets under management, right? And it's a lot of Russell 2000, Vanguard Extended Markets, Midcap, 2000 Value,
everything.
Growth.
This is an extension of what we were just looking at with those three charts. I just
everything
wanted
that's
to
not
say,
tech.
Everything that
investors
is not
are
tech,
not interested in.
Either if it's small cap or if it's an equal weight sector or even some international stuff too, has been in a bear market for 2.5 years.
So, all right. So to be clear, this is not the indexes. These are the actual ETF AUM that you're listing.
Yeah.
All right. So here's an example of the things that are still below the November 2021 high price in order of AUM. So how big they are for investors. IWM, which is the Russell 2000. Okay, we talked about that. MSCI EFA. That's below its 2021 high price still.
Yeah,
the
close.
entire world, developed markets. Vanguard Extended Market, same story. Russell Mid Cap, Russell 2000 Value, 2000 Growth, Biotech, which I find really interesting. MSCI Europe, Regional Banking, the Jets ETF, which is the airlines, Equal Weight Healthcare. It's just this huge list of stocks that if you feel like you missed the last 9 months in the market, which many people have, hey, there's still a lot of asset class up for grabs.
Yeah, assets, stocks, whatever you want to call it.
We're talking about thousands of companies.
Look at the holdings. Vanguard Extended Market has 3,668 holdings in it.
Yeah.
There's a huge number of stocks.
It's a huge number of stocks that are not extended and haven't done anything.
Of course, there'll be ebb and flow, right? There'll be corrections here and there, but I'm looking at this from the optimistic scenario of the next 12, 24 months, however long you want to go.
Todd, on the other end of the spectrum, you've got obviously the tech trade. You have a double levered NVIDIA single stock ETF that has more AUM than 92% of all ETFs.
This is one of the
playing it like Buffett.
NVDL, unbelievable.
Wait, so this is 2x NVIDIA?
2x NVIDIA.
Okay.
It's an oxymoron because it's a single stock ETF, right?
Yeah.
I
still don't understand the purpose of this either.
But these are a new kid on the block for ETFs.
Okay.
They serve a purpose, obviously, if you feel high conviction for NVIDIA, Tesla, whatever it is. But the NVIDIA performance has been so good that this fund's AUM has just rocketed.
Yeah.
And it was $5 billion right before this decline, which would have put it in the top decile of all ETFs, 3,000 ETFs here in the US.
It's ridiculous.
That's crazy.
That's really
it's great for the issuer, Granite shares.
Yeah.
They get the fee.
It was $200 million to start the year, rent to $5 billion.
Yeah.
Todd, you have this this Hall of Fame table that you put together showing the S&P 500 sector weight change over the last 5 years. And this is just unbelievable. You say that every sector except tech has lost market share within the S&P 500 over the last 5 years.
To tech.
It's unbelievable.
Yeah, to tech. Yeah. And so I have a lot of weight stuff in here, and maybe I overdo it or not. The reason I like this is because it shows how investing is evolving, and that the indices that ETFs invest in, the way that we are all investing in, that's the ingredients that make up our investing diet, right? You go to the grocery store, you're looking at what am I getting in this food? It's the same thing with indices. That's why I like all these weight charts. But
on the slide you wrote, humans are not the only one using weight loss drugs. LOL. So let's illustrate this point for people. 3 years over the last 3 years, tech has been 5.5. That's how much it's gained.
It's gained.
Has gained 5.5% of all the market cap.
Yeah. So it's gone from 28 to 33.
And over the last 10 years, it's gained 14.2. And over the last 5 years, okay.
But over the last 5 years, everything has lost market share to tech.
That's incredible.
Everything.
Lost. Yeah.
Not one sector is bigger in the S&P than it was 5 years ago, except for tech.
Yeah, all in
Healthcare has lost the most. You say the most amazing stat on this table, the 5-year column, every sector. But the bottom of that, healthcare is negative 2.8% of its value, basically.
Tough time for healthcare.
I don't know if it's lost all of that directly to tech, but indirectly it has.
Yeah. So the net
has to equal. Right. So, but I'm not going to go through and see if any of these other ones have grown. I'm sure there's been some change there. But in the end, that's a lot of market cap going to one segment of the economy.
Yeah. The pushback you could also get is that Meta and Google aren't even in tech, right? They went to communications, which helped that weight.
Yes.
Put them back in tech, and it's even bigger.
It's even more pronounced. Right.
Yeah.
If you did like the traditional, what we used to think of as tech companies.
So the S&P is taking a GLP-1, basically.
Yeah.
S&P tech.
All right. But so does this revert at any point, or is this just now permanently the largest sector of the economy, given how important it is?
I like the largest part of the economy. Do I think there'll be a rough patch at some point? Yes, but man, to say it's going to go all the way back to the teens or 20%,
it would be catastrophic for the market.
Yeah,
at this point.
You're reliving the tech.
There is a precedent, though.
There's a precedent.
Energy stocks, I think, I think at their peak in the mid 2000s. By the way, in the mid 2000s, we traded energy stocks the way that we currently trade tech stocks. So if you sat down, but I'm telling you the truth, if you sat down with a room full of traders, they were in Chesapeake Energy the way that people now are in NVIDIA.
Come on.
Okay, but ask people that were there.
All right, dude.
I'm telling you the truth. I'm telling you the truth. And energy was 12% of the market. No, it
And
literally
now
was.
and now it's 3.5.
1%. But I'm making the point that there were stocks that were the AI stocks of the day,
Right.
and they were coal. It was a stock, James River Coal, that traded its market cap 10x a day. It was one of the hottest stocks in the market. It's possible that tech fades a great degree. I don't think it's happening, but I'm just saying there's a universe where a 12% sector of the market goes to 1%.
We can find examples. I mean, industrials way back in the 70s. I think were a big weight, and are down to 7-8% now.
Do you know how big tobacco stocks used to be relative to the overall market?
GE, right?
Telecom, AT&T.
So it's hard to bet against it, but there is precedent.
Todd, this doesn't seem right to me. Semiconductors are now the largest industry group in the S&P 500.
Oh yeah, this is index evolution, right?
I mean,
so
it's NVIDIA,
it's
Broadcom,
NVIDIA,
Qualcomm, AMD. These are big stocks.
No, but within all the other tech giants, what industry groups are they in?
So there's software, which is Microsoft and
Salesforce,
Oracle, Adobe, and then Apple's in hardware, along with like Hewlett Packard and Dell.
Tiny companies.
It's just Apple, yeah.
Yeah, okay.
But so semis, 10 years ago, semiconductors were 2% of the S&P 500.
What are they now?
2%, 13, 12.
So it's the largest industry group.
Yeah.
That seems
so
a little
the
crazy.
the level below sectors, right, if you want to get more granular.
I actually would bet that could mean revert more than overall tech.
Semis are super cyclical.
You could see you could see that the semi. What is it? 13? What do you say? 13%?
Yeah.
You could see that easily coming down to 8. Like, why not?
Oh, totally.
Yeah, I agree with that.
Especially if NVIDIA goes through a hard period.
Or if some other sector. So you need two things to happen. You also need some other sector to rise up and take the place of the.
Yeah.
What again, we've seen Chevron and Exxon outweigh everything else in the market. We've seen financials.
I was about to say financials. Look, how about this? Over the next year, financials will flip semis.
Ooh, interesting bet.
Wait a minute. So
it's hard to see, but
where was the peak? Oh, look, do you see where Exxon and Chevron are in 2008? Like I'm telling you, those were the stocks that everyone was talking about.
I believe it. I just don't think that Chesapeake Energy was traded by common folk the way that they trade Apple.
You have no idea. Okay. I'm telling you that this was.
I would disagree to disagree. You think people were trading Chesapeake like it's Facebook?
No, I was there. We did.
Okay,
you can't disagree unless you take a time machine back. All right, actually.
I'm not saying that they weren't trading Chesapeake.
I shouldn't say
that. It's not like Nvidia today. It's just not. I don't care what you say.
It sort
of I don't care how there you were.
It sort of was.
No, it wasn't.
No, it sort of was. And also,
there was no 2X Chevron.
How old are you?
37.
We there for this? No.
I was in college.
Rob.
So
where's Rob?
Dorm
Christ. You're the only person here. You're the only person here older than me.
Josh, it's true.
It's true.
There was a time when energy was king of the market.
Energy,
that's not what I said.
Energy was.
Josh is saying that people are trading Chesapeake like it's meta.
Yeah, they were.
Okay.
They really were. Okay. No, truly, they really were. Not just that one. I shouldn't just like harp on that one example, but I have to tell you, we had shipping stocks that people were talking about. Oh, it's a blue chip shipping stock. It was just a different time, and it's not that we didn't have tech stocks.
I would say is this: did 80-year-olds ask you about that?
Oh, hell yeah.
Okay.
Yeah. Aubrey McClendon was the CEO of Chesapeake Energy, and he was on Mad Money. He had a weekly spot
Todd,
with Jim Cramer.
This is great. You wrapped it right to where I wanted to go with this. He then took the Sonics to Oklahoma City.
Yeah. But it's
and then
No. Aubrey McClendon was Jensen Wang in 2006. Yeah. I promise you.
I know he was a big deal.
I promise you, but there were like more than just that one stock. I shouldn't give you that impression. My point is, right now and for the last 10 years, the only stocks that people are really excited about trading happen to be involved in cloud computing and tech and this has gone on for a really long time, and those stocks are now a huge
Not to
portion
belabor
of the market.
point, but just to say that just because those energy stocks came down, like that has nothing to do with Apple. And I'm not saying that Apple can't come down. It's just I just don't like the comparison.
I don't think that's a good comparison to Apple, but Exxon is. Exxon in its day was Apple.
So I want your guys' opinions on this. Todd and I were talking before. Eric Balchunas tweeted, VOO, which is the Vanguard S&P 500 Index ETF, is a mere $2 billion away from breaking an all-time annual flow record. And it's the middle of July. One more data point from Balchunas. ETF, this is from today. ETFs took in $15 billion yesterday, bumping up the 5-day rolling total to $60 billion or $12 billion a day, unheard of. And the rolling 1 month to $141 billion, which if it were a calendar month would be an all-time record. It's the 18th of the month, by the way. This is because you have traders, SPY, IWM, TLT, and retail, which are the Vanguard and iShares funds, both piling in like crazy. So my question, Josh, Todd and I were talking about this before, where is this money coming from?
You're not going to like the answer. You're not going to like my answer.
Energy stocks.
Money market funds.
No. That's the wrong answer. It's too fast.
Too soon? Okay.
I'll tell you what I think it is. I think it's literal cash and brokerage accounts.
Yeah,
like
okay.
Actual cash.
Not money market funds,
Yeah.
but like just
Cash.
cash.
There are cash ETFs, basically, right? The BIL, that's a T-bill.
No, Todd,
type
I'm
fund.
saying literal
yeah, I know. I agree.
uninvested cash.
Uninvested cash.
Because it just happens so fast.
That's wild, though, that we're seeing an inflow record to that extent,
when the markets get going like this, FOMO comes out and everyone just piles in. VOO just takes in money. It's a vacuum.
But like where? So we've seen data from custodians
paychecks, right?
that I think 20% on average in cash is not crazy. So let's say like given how high interest rates were, let's just stipulate that it's 10%. That's still a ton of cash that could be deployed into the market.
Yeah. I mean, once you start seeing other sector ETFs atop the top 20 leaderboard on the day-to-day
Are there
basis.
any right now? Some.
I don't know if I don't have the data in front of me from today, but yeah, there's been some money into say XLF, right? A decent chunk of dollars. I want to say.
So
like
this is
500
this
million.
is on a monthly basis, sorted in order. It was SPY, IVV, IWM.
That's the typical stuff.
The Qs, TLT, VOO, RSP. Oh, RSP. That's not typical.
So RSP, that's different.
That's not typical. What else is in here?
That's
Who's doing that?
This is Balchuna. Oh, who's doing RSP?
Yeah.
I think it's just like the catch-up trade.
Totally a catch-up trade.
Is that-
Some people want to equal weight.
Is that XLF, I say?
So rather than buy small
Yeah, there you go,
caps,
XLF.
Yeah.
rather than buy small caps, a hedge fund will use RSP, which is equal weight, and that way they're getting more weighting toward the smaller stocks in the S&P 500.
exactly. Anything but tech.
Anything but tech. RSP works for that.
Yeah.
Okay.
Look what's number 11 on there, the Dow Diamonds.
Never.
that's-
Do you ever see that?
It takes in money, but I don't know about being a top 15 name.
How big is How
looking
big is
right now.
VOO right now?
500 something billion? Just
500 billion.
I think it just crossed 500.
So
the
here we
second
go.
ETF to do that.
Oh, yeah, here it is. It's the same size as IVV.
Yeah, those are the three big guys. SPY, IVV,
SPY, IVV,
Boom,
and they
yeah.
effectively all do the same thing.
1.5 trillion across 3 products.
Okay.
And they're literally the same thing. They track the S&P.
Okay, so that money is not coming out of other stocks. I agree with Michael. That's
SPY
just
would be
money
the
that's
only one.
uninvested.
SPY would be the only one because that's a little bit more the quick money, right? If I got a hedge or I got a quick exposure. VOO's
Yeah.
staying there. IVV's
All
staying
right, but
there.
could we just isolate VOO for a second? Like,
Yeah.
because that's a little bit of a different beast. But again, Eric said it's $2 billion away from breaking the all-time record for a year, and we're July.
That's
So,
crazy.
What's the story?
I don't know if that's just paychecks. Vanguard
And the
people.
amazing thing is, we're still seeing money market funds hit record highs.
$2.5 trillion in retail AUM. I like to separate institutions and retail because they have
What
different
money?
purposes.
2.5 trillion money markets from retail.
Retail accounts. Yeah,
Okay.
that is
So
major.
So we had a relatively new client who is sitting in money market funds, and the conversation is like, well, when do you get out of some? Okay, I agree with you. Rate's going to come down. And Callie took a look at some of the historical precedent of like how fast things move once rates start actually getting cut. And you kind of have to anticipate it with a large dollar amount.
You got to get out.
But what did Callie find? Like 13? She said 13 months?
I don't have it in front of me, but yeah, what
I do.
you have that chart? That was eye opening to me. I didn't. So we did a show recently, Get Out of Cash. We had Alicia Levine on.
She's great.
And she's great. She made some really important points about this. But like, if you're planning to get out of cash, stop planning and get out of
Just
cash.
get out. What are you waiting for?
If it's cash, if it's really meant to be cash, then leave it alone.
Buying a house or something. Yeah.
Right. But as an investment, the money market trade is long in the tooth.
Oh, totally. It was what everyone talked about. Any conversation I had, but these 5% yields are great, aren't they?
Yeah.
Like,
Are people going to be as excited at 3.75%?
no, once you get cuts and this number goes down to 3-ish, after tax, it makes no sense. You might as well buy another longer duration bond ETF or any other stuff out there, actively managed bond ETF that you can get the yield then.
John, chart 42 while we're on this topic. So Callie said, money market data since 1950 shows that people tend to hold on to cash until an average of 13 months into a rate cut cycle.
Wow.
So they're way late. So they're way late on making that adjustment.
Because you know what? If it goes from 5.25 down to 4.7, all right, still good.
Yeah, you're
still good.
I'm still getting
still not bad. So what do you did work on this time? What do you say?
So in the mid 90s, the rates go from all the way from 10 down to 3. Money market AUM at that 3% level finally stalled out. Right, the flows flatlined.
So Fed funds rate was 10%.
Yeah.
And it was taken down to 3%. Now that's a cutting cycle.
That's a big, you had the recession in 91.
But you're saying money stayed in there?
Well, you didn't have outflows. It just, the inflows just kind of dried up.
But that's wild. It didn't run out.
So then the interesting part though is once the hiking cycle came back, we went back to 6%, money market AUM grew with the S&P throughout the rest of the 90s. So maybe some of that money's going to stocks, some's going to money market funds for whatever reason. So I don't know if money market AUM flows ever dry up unless we get a major cutting cycle. That's really the key part. You got to get it below 3% for these. So
you say we think it likely takes cuts back to 3% or so before money market inflows meaningfully slow.
Yeah. Whoa! So you think that they're not only they're not going to go out, but they're going to keep coming in?
They're going to keep coming in, barring major cuts. People love this. 5%,
and it's a habit,
4%.
and people keep doing what they've been doing.
Yeah. If I have $100, maybe I put 90 in stocks, 10% in that cash.
Right.
Just think about how some people think out there. Right?
Are bond funds ultimately the primary recipient of money market outflows if and when we get to 3% Fed funds rate?
Yes.
I think so.
Yeah.
Before it goes to stocks, it makes a stop in the bond market.
It's a demographic thing too.
I think so too.
Right. If I'm too nervous to take what I had in cash and however long it was sitting there, I'm not going to go and put it in stocks where I can
You still have 70 million boomers. And they're not looking at money markets and saying, should I buy some stocks with this?
This is a huge, I really want to delve into this more data, a huge topic for the fund industry because there's so much wealth there. Where's it going to go? This is why these buffered funds are getting so big.
Here's my guess.
Funds, right?
I would guess, and there probably is data on this. I don't know why I'm guessing, but I would guess that 40 to 50% of the money that went into money market funds is in a brokerage account, meaning you're taking money out of bonds and you're just parking in money market funds there.
Yeah.
I would say a lot of another part of it could be money coming from somebody's savings account getting zero going into money market funds. So part of it,
that's the other from banks.
I think more of it is actual cash versus like I'm gonna fix my duration.
That makes sense too. And a lot of that escalated after the bank failures last year. That's when this really
That's when the
took
cash
off.
sorting really happened.
Yeah.
So in other words, there's no reason to expect us not to go back into cash or sit there as opposed to getting back into the market or the bond market.
You know, it's a really great product idea. I would do this if I were on the other side of this business. I was building products.
What's that?
I would do like money market funds with a wink. So you got a money market fund, right? But rates are now like 3%. People aren't that excited. I'll sprinkle a little mystery stock in it every month.
Oh.
Every month I take like 2% of the cash in the money market fund, and I randomly just buy a tech stock with it. And I don't even tell you what I'm going to buy. And then one day you like just
can't miss.
You hit the website. It's like, yeah, you're 98% money market, 2% Microsoft, and secretly you're like,
it's like
thank you. I didn't want to do that for myself. Thank you for doing that for me.
This is like the Kinder Egg of
it's literally it's the prize in the Cracker Jack box. It's like, yeah, it's a money market fund with some sex in there.
I think
we're putting some sex in the money market fund, and then people don't have to take the money out themselves and buy stocks. You just do it for them.
Cracker Jack funds.
Yeah, now you have to sign something.
NVDL.
I'm gonna throw some NVDL on that motherfucker. What do you think about that? Here's your money market fund. How you like me
this.
now?
This is like kind of like credit card roulette in a way.
You want to build this with me?
Yeah.
Okay.
Let's partner up.
All right. Todd and I have to go, guys. Have a good rest of the show. No, I think though, but people need other people to do that for them. If you sit in a money market fund for 3 years and the stock market's up 30%,
it's an education issue.
What do you mean?
People get scared of the market.
Well, sure.
They look at what happened in COVID. Oh, stocks went down 34% in a month.
Yeah.
Well, yeah, but then they rocketed right back.
It's also just inertia.
Inertia, whatever you want to call it.
Yeah.
And then they went down 24 in 2022.
Right. Todd, you do some of the best work on thematic ETFs. And Michael and I were talking about this topic the other day. Morningstar came out with a report that the average fee paid across all ETFs has probably hit rock bottom and is now in some areas starting to climb. So in other words, the index funds will just be free. They'll just be index funds. Okay, forget about that. The fund industry is getting better. at marketing products that actually have a fee. And as a result, I think the average fee paid, we said, was 36 basis points. So that's probably as low as it's going to get. Doesn't mean it's going back to 50, but thematic ETFs are going to be part of their way that mainstream asset management companies climb out of this fee abyss into increased profitability.
Thematic plus exotic derivative type plays that the common investor can't create.
Okay.
I have a problem with thematic funds, though.
Okay.
It's too many?
There's a supply and demand issue.
Get your shit off. What do you got?
There's a major supply and demand issue for thematic ETFs.
What's the issue? You supply them, I demand it.
There are too many products chasing too few AUM. There's almost 200 thematic ETFs with less than $50 million in assets.
So what?
That's not profitable.
Okay. Let them live.
Well, it's great for the investor. You have all these choices.
Yeah, but they kill these things off.
There's going to be a lot more, I think, that need to be killed off.
So we used to do blog posts about this topic. In 2011, 2012 was the first big wave of just new ETF launches on almost a daily basis. And it was comical.
Yeah.
Some of the things that were launched in that era. Like,
it's still going.
I know it's still going, but it was like, oh, do you want to be invested in corn? Here's 5 new ETFs that invest in corn. All right.
That's AI right now.
So I remember there was like silver, there was leverage silver, there was like
plutonium.
There was ESG silver. I mean, it was just, so we used to make fun of this and we used to like scream like, oh, there's too many ETFs. The truth is, they're not bothering anyone.
No, they don't bother anyone.
It's survival of the fittest, and these fund companies eventually they kill them quietly.
Well, I mean, there's one ETF company that since 2018, they've launched 22 ETFs and they liquidated 11 of them. Guess what?
It's Defiance. Yeah.
The ones that get liquidated.
Oh, you knew who that was.
The ones that get, I didn't want to say names. The ones that get liquidated are not
This
the
show
ones
is brought to you by Defiance ETFs.
They're not the ones that are performing well.
We love Sylvia. Sylvia's great.
So, but what is that indicative of? Just like a fund company throwing too much spaghetti at the wall, and
you're trying to chase the too hot of a theme as opposed to going something that's more durable.
Okay.
So here's an interesting one.
But how do you know what's going to be durable?
Oh, you don't.
I'm not saying it's malicious, but it's tails I win, heads investors lose.
Yeah, that too.
But how do you? But so how do you know which ones are really going to be the best ones? It's not easy.
No, it's definitely not easy. I mean,
I wouldn't know.
Cannabis was a big thing off the idea that everything would be legalized, and we know how those stocks have been. They've been terrible.
Well, to Josh's point, it's hard. These fund companies are not launching products that they think are going to fail.
Of course not. Nobody would do that.
When I see iShares today launched a manufacturing fund.
Yeah, good timing.
I think that they see what's going on with reshoring, whatever. I think when they launch a new thematic fund, then I pay attention because they've probably done their due diligence. And there's a couple other reshoring funds out there that have been pretty successful. So that's more interesting. That sounds like a durable theme as opposed to chasing some.
I never worked in the fund. I never worked directly in the fund industry, but my take has always been there's like 3 reasons to launch a new ETF. Reason 1 is it doesn't exist yet, and we think there's a reasonable belief that people want it. That's perhaps the purest motivation to do that. Reason 2 is this is a fucking gimmick and whatever, we'll ride it as long as we could ride it. Maybe there's a famous person who
that's like the inverse Kramer nonsense.
We'll slap their name on it.
Yeah,
maybe
right? Like that's a joke.
It's an in joke. It's a meme. It's something. There's a gimmick. There's like a catchy thing about it.
There's a certain crowd for it.
Yeah.
Yes. Now I don't know anyone like adults who are investing in these things.
Oh,
but
the DGen stuff. Remember, like there was a few of those. The Portnoy one.
Buzz.
Like social media sentiment. There's a few of those.
Yeah, but so from Van Eck's perspective, it's like, look, this is a thing. People are trading these meme stocks. Let's bundle them.
Round Hill had meme.
Yep.
Yeah.
Literally meme was the ticker.
Okay. And now if they don't work, okay. Like
you close them.
You close them, but the thing is they don't throw an event to announce the closing of an ETF. It's not a party.
No, it's a random press release.
They take it out back and strangle it. That's okay.
I'm okay
Investors
with that.
get whatever money's left back.
For those investments, like I think people know that those are gimmicks, right? And so people that are investing for the most part, it's not their core, right? They'll throw a few bucks into it and it's sort of fun.
But just backing up. So those are my first two reasons you launch an ETF.
What was the third?
The third reason is every bit as legitimate as the first, which is you have somebody asking you to make it. You have somebody
that
come
to this
to you.
manufacturing case today.
Right. So they didn't wake up one day and say, oh, you know, it'd be cool. Let's do an iShares manufacturing ETF. they obviously have people trying to get exposure to this reshoring theme or a supply chain theme or whatever. And enough people ask them about it where it's like, all right, fine, we'll build it. So I have no problem with that.
The good example here is innovation and disruption.
Yeah.
Those exploded 2020, 2021 after ARC's success. And that to me was
Rick Edelman went to BlackRock and said, my clients don't need more exposure to the FANG stocks. They want innovation. They want exponential tech.
Mm-hmm.
So Rick Edelman as an RIA is not going to build the ETF because then he can't allocate to it because then he's double dipping.
Yeah.
So he says to BlackRock, if you guys build it, I'll seed it and I don't want to get paid on it. I just want it to exist because I want exponential tech as a sleeve in my portfolio. So I like that because it's grassroots, it's organic. It's not some contrived thing where someone's trying to use a gimmick.
Yeah, catch the gimmick. Yeah, that makes more sense to me in terms of sustainability. I don't like when you have all these copycat funds because that's what's created this supply and demand.
What else don't you like?
Yeah, what else really grinds your gears, Todd?
In life?
No, in
No,
the
with
ETF
the
market.
thematic ETFs.
Obscure countries.
Obscure country.
There's no reason anybody needs
Egypt. Remember JC used to love Egypt?
Mongolia.
He's a big Egypt guy.
Yeah,
He's
like,
Egypt, bro.
He's like, bro, I'm telling you, Egypt.
I have to see him in a little bit, by the way.
Oh, you're gonna happy hour on
CMT
Stone?
happy hour.
Okay. I got invited, but I can't make it.
Come all.
The thematic explosion happened.
I don't do away happy hours. So Stone Street might as well be another planet.
I turn into a werewolf if I go south of 42nd Street at 5.
Todd, what was the hot thematic, John, chart on please. What were the hot thematic ETFs in 2017, 2018? I don't remember.
2017 wasn't much.
But
you
you had inflows.
There was some inflows to ARC very early, and then PAVE, infrastructure.
I don't remember that one.
Yeah, that's a
What are you
bit.
laughing at? It's
So-
good ticker.
Really?
PAVE,
Yeah.
Global X Infrastructure ETF. PAVE.
Oh wow, I didn't even know.
It's actually the largest thematic ETF now because ARC's had its challenges.
Wow.
Wow. So it has done well. It's got
Yeah, it's done well.
Caterpillar,
It's-
Deere.
Yeah,
I'm guessing.
it's basically reshoring, but
No, that trade
labeled
worked
differently.
That trade worked. I like it.
Cybersecurity, I think, was probably in there.
Hack.
I don't remember when the Sony hack was.
CIBR is.
But CIBR hack.
Is CIBR bigger than hack now?
I want to say yes, but I'm not sure.
Okay, go on.
100%. So cybersecurity, infrastructure, and then a pinch of ARC stuff, I think.
Doesn't this look, but you're looking, so 2020, 2021 is a massive boom in thematic flows. And we know
Yeah,
it was all ARC.
Kathy
It was
is a
all
huge,
ARC.
Yeah.
all right, it is.
But all 5 of them, right? They all had
Yeah, it was the
monster
whole- it was
flows.
the whole suite.
We'll see another one of these though.
Yeah, I don't know what if it'll be.
But
ARC,
something will
innovation.
cause it.
Something.
Is Bitcoin not in here?
No.
Okay.
No.
That might be that
crypto.
last candle,
No.
dude.
It would be much
Nah,
bigger.
no crypto.
Okay.
No spot crypto, I should say. There's probably
All right,
stock-based
so,
crypto.
So your conclusion is there's a future for thematic ETFs somewhere in the industry, but so far overall flows have only had one real major run during the easy monetary stimulus environment.
Yeah.
All right, it's a lot of dumb money, young money, people that aren't worried about risk, people that just want to get in the game.
It created a black hole for issuers because they said, "Oh, people want these," and then everything flatlined.
How many? Oh, so how
Well,
many?
because there was a million Cathy Wood copycats.
That's what I mean.
Right.
So this sucked in. It was a black hole for ETF issuers. It's like, oh, we got to launch an innovation and disruption. We got to launch cybersecurity, cannabis, whatever. And
They
now
were
you're
like
stuck.
they were like SPACs, basically.
SPACs were
They
part of
were
that
the
too.
SPACs of the fund industry.
Yeah,
It's
Oh,
like,
the cannabis ones. Oof.
cannabis. But there's SPAC ETFs too. And then,
is cannabis the most uninvestable up until now thematic suite of ETFs
Which
that
one was-
have ever come out?
Meb had one.
Uh,
Toke was one. What? There's a few
yeah,
others.
it's got to be
I mean, these have just
Performance has been-
universally. Are they down 90%? Ish?
somewhere around it. They had a run when that headline came out like a month or two ago about the.
They have a run, like a 10%
yeah,
run,
and
but
they gave it all back right
they were
after
in the
that.
biggest drawdown they've ever been still.
They have not been kind.
That's not the ETF issuer's fault because
No,
there's a
how would they
universe,
know?
right? There's a universe in which some of those stocks ended up working out. They just didn't.
I mean,
Right.
Meb is there,
Yeah.
and he's a smart guy.
Yeah, Toke is
I
the
respect
ticker.
the heck out of him with what his funds are doing.
But this is a great example. When he launched that, when they all launched it to Josh Fund, how would they have known?
Yeah.
Well, I want to
of course
ask you
don't
another
know.
question, though. There used to be bigger barriers to entry to launch a fund, and those barriers have come down. There are companies that all they do is white label ETFs, and they can get
Yeah.
you a publicly traded product. I mean, it's your problem to raise assets for it, but they can get a product launched with $100 grand.
It's ETF in a box.
How much is that?
Yeah, 100, 250 grand.
So if I want to do my
we can do Crackerjack
money Crackerjack money market fund. All right, but so that's a lower cost than it was 15 years ago. Obviously,
absolutely. I
Okay.
mean, there was rules in 2019 ETF rules 6C11.
The exemptive relief.
Yeah, that's why all these active funds have absolutely exploded. Derivative
Yes.
funds, income funds, just total explosion of the industry.
Okay.
Made it far easier for barriers for entry for the common manager as opposed to say BlackRock to get into the space.
Let's look at this. Thematic ETFs have a supply and demand problem.
We just did
Yeah,
that.
so
we didn't see
here's
the table,
the data though, right? 186 products, 0 to 50 million AUM. If you get a bear market, let's just say the S&P declined 20% for whatever reason.
It's all going back to VOO.
These all go to VOO, and a lot of these funds get wiped out. They have to close.
We'd argue the primary issue for the thematic space is too many products. They're over 300 with only 120 billion of AUM. 76% of products have less than 200 million. Is 200 million the minimum viable long-term AUM for an active product?
I think that's fair. I mean, to be profitable, you probably need like 50 to 60, I guess, depending on the
Can I ask you a
fee.
question? Some of this is a marketing challenge.
Oh, it's totally marketing.
Who's
the
totally marketing?
I think marketing and distribution. Do you have the sales force, the boots on the ground?
Which is hard.
Performance matters
And
too.
performance, it's expensive.
Performance matters later. I mean, on the initial launch, there is no performance. So all you have is the sizzle.
It's all
You
marketing.
first launch a product, you might have a back-tested index result, but those are a no-no.
No, yeah, they never work.
So all you have is the story.
It's market. I mean, look, the spot crypto funds are a great example, right? There's 9, 10 that are all the same exact thing. iShares has their distribution; they'll do their thing. But then you have Bitwise, who has all these funny commercials, so they're doing their marketing part and they're gathering flows.
John, table back on. But you looked at the one-year flows of all of these buckets, and they're almost all negative, except for the ones that are 1.6 billion and above.
Yeah,
It's all negative. And guess what?
In a bull market.
And I was about to say,
yeah,
Josh is exactly right. They're all getting the shit kicked out of it by the Qs.
the Qs.
So if
Qs
in
are
a
the goat.
different market environment, this would look a lot different.
In 2020, it did. Every bucket here was getting inflows,
Right?
But that was a really rare free money.
One other
stimulus
thing is I
environment.
can't think of any theme that like perennially is going to do well because it just doesn't work that way.
Permanently, right?
So let's say you launch a sports betting ETF, which I'm sure there are 20 of them.
There are.
They're going to have an amazing run while those stocks are in favor, and then those stocks will go out of favor. The ETF is going to suffer, and that's when the outflows start.
It is hard enough to pick a theme, and then you got to buy it at the right time and sell it at the right time.
But
How many people
nobody's
can do it? No one can do
allocating to a
that.
theme that's out of favor is the other thing.
Mm-hmm.
Oh yeah, no.
It's just
like
no way.
You can buy stocks and be contrarian, the bulk index, of course. But
Yeah, Josh is absolutely right.
Like who's buying cannabis right now?
Nobody.
So when solar is out of favor,
Who's buying solar right now?
TAN? Is
TAN,
that
ICLN,
so
QCLN,
TAN is one of the first thematics
yes
to actually raise money. Okay. Solar is cyclical. It ebbs, it flows. There's bad news out of China. There's good news out of component prices. The price of oil goes up, it falls. In a downturn, no one's like, I'm going to start loading up on TAN for the turn.
too much risk.
They only buy these things at highs and they puke them up at lows.
Thematics are basically momentum plays,
Yeah,
right?
totally.
Yeah.
It's the same thing with these. There's a lot of EV funds, right? They all own the same companies, Rivian, Tesla, and nobody's buying those right now.
All right. Are we doing this Patak tweet?
No, we did that.
We'll gloss over that. Okay. I want to talk about rates, spreads, volatility, the things that drive markets.
Yeah.
Peter Bookvar put this out this morning. He called the current environment giddy, which maybe we cured that by the close today. Measured before yesterday's sell-off, the level of bullishness continues to get even more extreme. In the Investors Intelligence Survey, the bull-bear spread rose to 46.9, the most since 2021. Bulls at 63.6 versus 62.7 last week. Bears slipped to 16 from 17. In today's AAII survey, bulls rose another 3.5 points to 52.7, the most since December, and just 0.3 points from a level last seen in April 2021.
Feels good, eh?
Okay.
A little bit.
Bottom line, combine the above with the continued rise in euphoria as measured by the Citi Index, and we are ripe for more than just a one-day correction in order to shake out this giddiness.
Maybe even a 2-day.
It could be perfect timing, too, with big tech earnings over the next few weeks. So we're going into tech earnings at
High expectations.
massive euphoria based on sentiment.
There's regardless of what the survey says, there's always some form of a correction before an election. It just happens. Right?
Yeah.
We can go through the years, 2020, 2016, 2012, 2008, all the way back to the 50s. There's always some sort of correction, whether it's earnings-based, whether it's nausea about the election because people get anxious about it.
This one is nuts too.
Oh, this one is.
We don't even know who's running.
This is
right. This is a new kind of. This
one's been different.
Do we put this chart up? Just eyeball this though. Just eyeball these peaks.
Yeah. So the sentiment gets hot and it sets yourself up for a little bit of disappointment. I like the idea of a summer speed bump, right? The largest correction this year is 5.5%.
Yeah.
We've had plenty of years where that's been the max correction, but the average year is 14%.
We put these charts out a week and a half ago. Summer storms. Callie and Chart Kid Matt did some stuff on this.
Could I give a shout to Callie? Hey, Callie.
Please.
As many as you want.
So we had a mini spike in the VIX from up to 16. I mean, it was down at like 11. Not quite 11. It was down at 12. This is a wild chart. So Ben and I were talking about how impossible it's been to be an active manager. You had a record number of stocks underperforming the index over the past 30 days. Like 2 weeks ago, it was just every stock was losing. And then you had this wild, vicious snapback where everything was outperforming.
Usually a good time to buy equal weight then.
Yeah.
It feels terrible, but it's actually a good time to equal weight.
Did you see like giddy sentiment among active investors, fund managers, like on Twitter? So a lot of people that professionally manage money despise the Mag 7 leadership. They're sick of it.
Yeah.
It's like hurting their careers.
They can't overweight those stocks.
So this week, like there must have been people that were like really pumped about this. People that have small cap tilt, they have a value tilt, they have something. Anything but Apple, Microsoft. They must have been pretty excited.
It's so hard to own 7% of each of those names if you're an active manager.
So nobody does.
Right. I mean, I'm sure 2 out of 3 maybe.
Yeah.
Out of those names, they're overweight, but everything in bulk, that's extremely difficult.
Can't overweight those 7 names.
It's just
raise the
lot
index.
I mean, if you're an investor, why am I paying for that then?
This is where all the memes come from. There's a giddiness about like, oh my God, everything I own was underperforming and now half of it's outperforming.
Yeah.
And it happened overnight. It's like Christmas.
And by the way, that is not breath to me, if that's a thing that goes on.
Okay.
You know, percentage stocks underperforming, outperforming, that's not breath. That's just what's working.
Do this Russell 3000 thing.
19% of stocks in the Russell 3000 hit a 52-week high. That's pretty. Is that breath?
That's excellent.
This
is participation.
That's pretty good.
Breadth and momentum. Expanding new high list is needed for the durability of a bull market.
That's a lot of units.
A lot.
19% hit 52-week highs. I'm proud of all those units.
You can get corrections from this, right? Overheating in the very short term, but it's great for the next 6 to 12 months when you back test this, right? Back 30, 40, 50 years, however long you want to go back.
Let's go next.
This is the chart that we were looking at earlier, just looking at the rolling 5-day average of net advancers. And yeah, the rally has broadened out.
Broadened out. This is
It's
what
a beautiful
you need.
thing.
I mean, that's what's necessary. That's what gets you out of trouble for all these non-tech corners.
Not to pat ourselves on the back, Josh and I, but
No, you can.
all year we've been talking about narrow leadership, but usually resolves to the upside. It's usually the rest of the market catches up.
This is
We said this so many times. Like everyone thinks this divergence is automatically negative, and the leaders are going to succumb.
Yeah, just wait till
it's
they
the
fall.
pessimistic attitude.
Well, here
Yeah,
they
glass
fell, and the rest of your portfolio went up.
This is the bench coming into play. The starters coming off the floor for a little bit
That's
after
right.
a nice run.
That's right.
We're bringing out Josh Hart.
Yeah,
and he's gonna
happy Independence Day. Here's a fireworks.
Precious Achua time.
Precious Achua. Congrats on your new deal. I don't know if you actually got a deal.
There's a wild one. Bespoke tweeted, strange day yesterday. And this is, I guess, Wednesday we're looking at. Yesterday was the first time since April 2000 that the S&P 500 was down 1%, but breadth was positive. What could be more bullish?
I mean, it's great under the hood. So the indices lie. They mask everything now, especially when you have 10 stocks at almost 40% of the index.
Yeah.
And this is when you got to be a little bit of a detective and look on what's going on. It's a great statistic.
So how many stocks were up with the so the market's down more than 0.5%, and more stocks were up than down? Like a few hundred stocks were up?
The S&P 500 is down 1%, but more stocks were up than down.
Yeah.
It's
pretty wild.
That's pretty cool.
You could make the case. It's just rotation, right? Buying the stuff that hasn't worked.
So we got Netflix after the bell. 2 out of the 3 stocks that I owned have bombed this week, Domino's and Schwab. So I think Netflix is going to be the third disaster of mine.
You're due.
I'm due for a win.
I think so.
I hope so.
I hope so.
I'm not feeling too confident.
Is
to be
that
honest.
statistics?
That's statistics.
You got to order more pizza.
We have to talk about Trump's economic ideas. So Bloomberg sent 3 reporters to Mar-a-Lago at the end of June. This is before the events of this weekend. But the gist of the story that they came out with was about how he thinks about the economy. And I put a take on Instagram like a fucking idiot about like from the article, not my own take, like literally his. So let me just read this to you. The comments are out of control. But this from the article. Trump says he reminded the assembled executives that in 2017 he slashed the corporate tax rate from 39 to 21. Actually, it was 35 to 21. The reporter fact checked him and vowed to push it lower still to 20%. Quote, they loved it. They were happy. He adds that he wants to cut the rate even lower. I would like to get it to 15%. But Trump is also aware that whatever love the CEOs might have expressed was ultimately driven by self-interest. They can read the election polls like everyone else. Quote, this is Trump. Whoever's leading gets all the support they want. I could have the personality of a shrimp and everybody would come. So I commented, this sounds like a wizened, like more experienced version of himself. He gets that self-aggrandizement or having CEOs like pat him on the back on TV is like not the thing. And now he's like, yeah, they'll support me if I'm winning. And he kind of gets that this is a transaction. There's a story in the article about how Tim Cook got around the China tariffs and visited Mar-a-Lago or visited the White House and like showed Trump respect and got what he wanted out of the deal. And Trump knows that that's what's going on and everybody's happy with it. So I just said something like not Trump supportive, but just like, oh, this guy seems like he figured it out. Like he seems like a little bit more normal. People were so angry. They're like, but what about kids in cages?
So this is the comments on your Instagram?
Yeah. But
I have a funny story when we're ready for this.
Tell the story.
I feel like I'm sidetracking the show.
All right. So TSMC fell the most on this article. Okay?
Okay, yeah.
Fell 5%.
Mean reversion.
Because Trump's like, why aren't they paying us for protection? which I don't think he's supposed to say that out loud. Anyway, they whacked the semiconductor stocks for obvious reasons because it looks like he wants to double down on tariffs and he's not so sure about the whole Taiwan thing. Okay. But markets were back in this moment of the Trump trade stuff. So 77%, according to Bank of America Fund Manager Survey, think that we're going a sweep. So Trump in the White House, both houses of Congress, would lead to higher bond yields. 52% think a sweep would lead to a higher U.S. dollar. 48% think a sweep would be positive for U.S. stocks, or slightly less than half.
Okay.
Anyway, this is where we are now. He's back. We're going to do all the same old games. What industry is in favor? What CEO is he mad at? I don't know. What are your thoughts?
The setup feels awfully familiar to 2016, where you have this kind of anxiety and boiling, where you had financials have been sideways, right?
Yep.
And they look like they want to explode. The positioning flows aren't there. Same thing with healthcare.
Oil rallied today.
Energy.
Yeah.
I just am worried that we may be setting ourselves up for disappointment.
Why?
And then tech will come right back. Because that's what, they had, all those industries had a run post 2016.
Yes.
There was a huge surge of money to value. Value funds took in a massive amount of money post 2016. And then it petered out. And we went right back to tech.
Yeah, it lasted a year.
Yeah. Which I guess is great for the more intermediate term folks out there.
Yeah.
But I still kind of defer back to tech eventually taking the crown again.
What was your big takeaway from what Trump had to say about his economic policy?
Last week, Neil Dutta was on here, and I gave the analogy that the president of the United States, with regards to the economy, is sort of like a baseball manager. They could like do things. They could blow the game. They could do things, but generally speaking, it's the players on the field that have the biggest impact.
Yeah.
And I actually might want to walk that back a little bit because Trump what he does is so volatile. Just what he did the other day, he actually can have a real big impact on certain industries.
Yeah, it's an industry thing.
Because most presidents are like status quo presidents, right? They're not really going to turn things upside down and shake them. He has the ability,
he shakes them.
For better or worse, to really shake shit up.
Yeah, the policy. I mean, Dan Clifton's our policy analyst. He's the best at this. He tells us this is an industry thing. not an index.
I agree.
major market.
I totally agree.
Elections are about industries.
I totally agree with that.
He wants to fight inflation by lowering interest rates, cutting taxes, and adding tariffs.
Listen, it's so crazy. It just might work.
These are the three things that are the most inflationary things you can
Who
do.
knows? I don't even know anymore.
I don't know at this point. Yeah.
Well, they said, like, what do you believe? I believe in, well, I'm going to fight inflation. Well, how? I'm going to drill a lot. Okay. The payoff from, you start drilling today, we'll get some more oil in 2 years. But more importantly, he thinks that lowering tax rates further, putting tariffs on all goods, not just Chinese, but all over the world. He wants to renegotiate with Europe. And lowering interest rates. Those are the three keys to fighting inflation.
Well, but also what he says, but that does it even matter what he's saying?
Because he'll change his mind
He'll
tomorrow.
change his mind.
So my fear would be the last time we had the trade war. I think that was like 2018, right?
Yeah.
That was a bear market for a lot.
It was
of
very
industries.
bullish for bears.
He almost put the entire farming sector out of business. He had to do direct payments to farmers because of what China retaliated with on soybeans and what it was a mess. It was a mess for the auto companies.
Beautiful
huge
soybeans.
correction. The most beautiful
Financials
soybeans.
decline. It ultimately ended with that puke in 2018.
I
December
still
2018.
think though that he's gotten smarter from the last time. He was fighting tooth and nail with Jamie Dimon 4 years ago. Now he's talking about he wants to appoint him as a secretary. The other thing that was interesting is TikTok. So
Tic-tac.
well, in the last year of his first term, he was dead set on we're eliminating TikTok, we're banning it, unless they write me Mr. TikTok has to write me a letter. No, but now he's like, wait, actually, maybe TikTok's good. I wonder why that is. Maybe because he's one of the most followed accounts on TikTok, and it's helping the campaign, and it's the only counterbalance we have against Meta. Like we have. The only counterbalance that exists against Zuckerberg, who he also doesn't love, who banned him for life, by the way. I don't know if you know that. So
I didn't know he wasn't unbanned yet.
I don't think so. So anyway, the point is he throws grenades, metaphorically. But if we react to them, then we're the clowns, because not everything that he says he wants to do, he'll still want to do tomorrow. I think that's like
we still have 3.5 months of this, by the way.
No offense. We have 4 years of this, and then you get Don Jr. in there. This could be the rest of your life. All right. Anything else left to say on this? Did we lose about half our audience?
Yeah.
Okay.
At least.
All right. Just a good half.
Can I tell you my comment story really quick?
Yeah, I want to hear it.
Okay.
Wait, what story?
Well, he mentioned the comments on his Instagram.
Yeah.
I have to share this.
Were you in them?
No.
Okay.
But last time I was here, I dug into the comments real quick on YouTube.
Yeah.
Here were 3 of my favorites.
Oh, comments about you?
Yeah.
Okay.
Which I don't normally do. I just
Duncan, we didn't delete those in time?
I caught them.
Okay. We try to edit those.
These are great. Close your eyes and tell me this is not the stock market Seth Rogen.
Okay.
A
Now
reply.
that you said it, I can't unhear it.
A reply.
That's a good one, right?
Skinny Seth Rogen.
Oh, skinny Seth Rogen's good.
And then a third comment. I had no idea that Seth Rogen worked at Strategas.
Oh, you got a lot of Seth. Wait.
I hear it.
Hold on.
I like Seth Rogen.
He's good.
Will you do some Seth Rogen dialogue for us? Can we really?
How do I do that?
Can we really test this
Are
out?
you high right now?
No, I don't smoke or anything like that.
No, you kickbox.
I like This Is the End, though. It's my favorite Seth Rogen.
What's the
movie.
best Seth Rogen line in anything? Can anyone think of? I want to get Todd to read
They're
it.
definitely not kosher, whatever it is.
Yeah. What's the best Seth Rogen movie?
This Is the End.
Not for me.
No.
Super bad.
What's the one with the pregnant
Knocked Out.
girlfriend?
No, Knocked Out's good too. Yeah.
Because that's really his movie,
That's his movie.
Yeah.
right?
Pineapple Express is my favorite.
That was good.
Pineapple Express.
That's a good one.
Who is he?
You know
Who's he in that with?
he's good at 40-year-old
James
virgin.
Franco. Is that James
Everyone.
Franco?
40-year-old
Yeah.
virgin.
40-year-old virgin.
And The Interview.
Oh, 40-year-old
The Interview
virgin.
sucked.
You don't like that one?
No.
Oh.
We done with market stuff?
I'm done. I'm good.
Are we all set?
Anything else?
Well, wait. I like this cycle defining chart. Let's do this one really quickly.
There's money markets.
Back to money markets, but sort of. What's the takeaway here?
So every anecdotal observation I had was about 5% yield for the last year and a half. The data reflects that too, about flows to money market funds are greater than everything, right? 1.1 trillion. This is through April. 1.1 trillion in money market funds since the Fed started lifting rates back 2+
This is
years
from
ago.
March of 2022
Yeah, Fed liftoff.
until April of this year.
Yeah.
Okay.
So I got to refresh the data. I'm a little bit behind there, but everything has been about money market funds. Equity flows have been good.
Yeah.
But this is all, I find that the attention towards 5% yields have reflected a lot of equity market apathy. And that resulted in this massive run we had too.
Yeah.
Along with obviously plenty of other variables. I just felt that the sentiment towards money markets was crazy relative to how stocks were bottoming and then having this major bull run.
But I like that because I think that's how people think.
Mm-hmm.
We didn't really see a crazy amount of demand for money markets until 4% rates.
Yeah.
Because everyone's like, oh my God, they're almost 5.
I think everybody loves it because people that have money in money market funds, assuming you're not all in, which would be foolish. But if you have, let's say 10, 50% of your portfolio in money market funds, are you mad that you missed a 20% rally? Who cares? It's great.
I think it's great as part of our portfolio.
It's
just
great.
The massive amount of money going to them though was startling.
Well, dude, it's been 15 years of zero.
You haven't had candy in 10 years. Now you have a bowl of candy.
Yeah, give me some diabetes.
Sugar high.
Speaking of candy, so did you know that happy hour is back? Like power hour? Do you work? Oh, I wanted to ask you this question.
Yeah.
I think the answer for me is no. Do you work on Wall Street?
Like physically?
You're such a liar. You're such a liar. If somebody says you work on Wall Street, you say yes.
No, I normally do. And then I read this article and I said, I don't think I'm part of this. I don't think I work on Wall Street.
Like if I go to a friend's house and someone's there who I haven't met, do I say, do I work on Wall Street?
You work in asset management.
I work in research. Yeah, I work in
if you work on Wall Street, that means
asset management.
That means you work for Goldman or one of the investment banks.
All right, so that I agree with that.
Yeah.
So, but people are like, oh, he works on Wall Street. Does he though? I don't get invited to this shit. All right, listen to this. Famed chef Jean-Georges Van Gerichten's new Park Avenue restaurant has become the epicenter of a new post-pandemic phenomenon for Wall Street's movers and shakers.
We gotta go.
The Power Hour. As soon as the closing bell rings, you'll go there right now.
Was that a beer every shot of beer every?
No. Traders, investors, and C-suite executives flock to 425, which opened last December at 425 Park Avenue, the Norman Foster designed skyscraper that counts Citadel as its main tenant. They come for the $25 cocktails and bar food that includes $68 egg toast with caviar.
I hate these people.
But also for the all-important FaceTime. All right, so here's the gist of this. This is like 3 blocks away from Grand Central.
It's a nice building.
So all these people, if they don't live in Manhattan, they live in Westchester, Connecticut.
Right.
So this is like you can make your train. The other place they mention is La Paz. We call it La Paz, but it's La Pavilion.
And one Vanderbilt.
And one Vanderbilt.
Dude, we don't work on Wall Street. I don't know any of these places. Or I don't want
egg toast for $68.
What's egg toast?
I'm more of an avocado toast guy.
What's egg toast?
I don't know. It's caviar.
I would like to eat there, but I don't consider myself working on Wall Street necessarily.
Hold on. Similar power hours have popped up at Chef Daniel Boulud's Le Pavilion at 1 Vanderbilt by Grand Central. The Monkey Bar uptown. Okay, that place I go to.
That place.
And the bar room at the Beekman Hotel downtown in Fidei. So if you work in one of these areas, like that's your Wall Street bar where you could see more people like yourself.
I am going to the Beekman next week. Maybe I am one of these people.
Anyway, this is the New York Post, and it's like a new trend.
But why are they calling it Power Hour?
Because people are not running out of the city anymore. They're sticking around for this after the bell, and it's like where they're networking.
I will say, my train this morning, I was on an earlier train than I normally on. It was back, like fully back.
Yeah,
people are standing.
Yeah,
in the summer too.
Yeah.
So that's I guess that's a good sign that all this stuff is coming back, because this used to exist at Bull and Bear at the Waldorf Astoria. Rob, you remember that? That was a scene. That was like in.
We'll know we're back if they ever bring back Beer Bar to Grand Central.
Dude, do you remember Beer Bar?
Yeah,
that was one of these. I mean, it was a lowbrow version.
What's there now?
Nothing. I don't know.
Le Cirque used to be a thing. People used to go to.
It's a Chinese restaurant now.
Yeah, but that used to be a thing. And then Stone Street, which we were just talking about.
I have to trek down.
There are no traders on Stone Street.
You're going right now?
Other than the people that you're going to meet.
Not right now.
Okay.
Only JC Peretz is there.
Anyway, I'm not a part of any of that scene. I don't think I'm like a Wall Street person.
I was telling Chris, I went out for dinner on Monday with people that work on Wall Street, and I was not speaking their language. Not even close. I was like an alien.
Were you intimidated?
They were very intelligent. These are like dorky Wall Street kids, but like they were like brainiacs.
Were they like quant side of Wall Street or like bankers?
Yeah.
What? Which? Both?
I don't want to say too much.
Yeah,
they were very smart.
What did you eat?
Egg toast. What the do you think he ate? All right. All right, listen, we're gonna wrap it right there by concluding that I don't, in fact, work on Wall Street. We always end the show with favorites, Todd. We'd like to hear from you. What do you got for us this week?
What do I have? Well, okay, I took my kids to see Despicable Me.
4.
4
Was good?
A+ stupidity.
I had so many questions from 3. I hope that get answered in this.
They don't.
Okay, great.
But I saw it in the IMAX.
Was
That
it-
was the power move.
Was that cool?
I felt really. I was impressing my children about how big the screen was.
Did they know the difference?
The one up there?
They had no idea.
They have no idea
Lincoln
what's going
Square.
on.
I just had to do it selfishly.
This is Lincoln Square,
Lincoln Square
on the Upper West
a
Side.
huge original IMAX.
Yeah, it's where I go to all my IMAX
got
movies.
I wanted to go tonight to see Twisters, but I have to go home. So I'm going to see Twisters
Oh.
tonight.
That's in IMAX.
Not an IMAX.
What's
Wait.
Walt's Apprentice?
So Walt's Apprentice is a book by a guy named Dick Nunes. He worked with Walt Disney up
Oh,
until his
shit.
death, and then spent the next 35 years. Basically, he's the guy who created the operational efficiency of the Disney parks.
Okay,
Be Our Guest. As
Yeah.
you have the book there. He's part of that.
okay. This is a book?
It's a book.
How many books do you read a year?
25.
How old's your oldest kid? Oh, you're done in like 2 years. Ask Michael.
I'm getting to the point where I sit down and read and I fall asleep 5 minutes later.
Yeah, that's where things are headed.
I try.
Yeah, yeah.
You know, try to get through.
But don't worry, 20 years will go by and you'll start reading again. I started reading again this summer because my kids no longer have any attention span for me. It's like, it's nice. It's like back in my life now. I got a stack of books and I'm plowing through them.
This is a good one if you like the Disney parks.
All right, so it's called Walt's Apprentice.
Yeah.
You're watching this Acolyte thing? It's the worst thing I've ever seen in my life.
I watched the Acolytes. The season finale was last night. I'm a big
Does it
Star
get
Wars
better?
fan.
Okay.
So am I, but I couldn't make it through
I
3.
watched 20 minutes. It was
The
bad.
second season has potential.
Time out. It's twins. It's like
Yeah,
it's
they're
like a
twins.
Freaky Friday thing. Do they switch bodies? What's going on?
How do I say this without spoiling the show?
How is it so bad? What are they doing?
There are no
They
Star Wars
ruined
fans
Star
that-
Wars.
that like this.
Michael Antonelli hates it. He's a big Star Wars fan.
There are no Star Wars
he likes
fans
everything.
that
the
are enjoying this.
the lightsaber duels are good.
Okay.
The story was a little slow, choppy, so I'm hoping the second season will be better.
Okay. Are they intentionally at this point doing this? Is there some sort of
man.
tax benefit to having these shows fail? I'm trying to figure it out because this is the 5th bomb in a row.
I like some of the other stuff.
Do you?
I'm a Star Wars nerd.
They have so many losses they won't ever pay capital gains again.
I think that's what this is. I think that's what this is about. Michael, you have a favorite for us?
Well, I haven't seen it yet, but Twisters. I can't wait.
So your favorite
Here,
is a
my
movie
favorite-
that you haven't seen
My
yet.
favorite is
Duncan,
no.
can
Here's
we
my
make
favorite.
a list of his
Here's my favorite.
He
Movies.
just doesn't understand favorites.
No, I do. Movies are back. I've been going to the theater more lately.
Hold on. The theater product is terrible.
What do you mean?
30 minutes of previews. Why can't I buy a water bottle out of a vending machine?
No, if you go to the IMAX, there's a lot of previews.
You're such a rookie. First of all, you walk in with a water bottle in your pocket.
I bring a water bottle, but just in
Well
case.
done, sir.
But
you need a backup water
why
bottle?
is there not? Yeah, I get thirsty.
Okay.
Why is there not a vending machine for the soda and the water bottle at this point?
Because
Because they want you to buy popcorn too.
they don't want you to buy one item.
Yeah.
You haven't figured that
The
out?
food's terrible.
Of course it is.
So give me a protein bar or something.
There's only
Oh,
one
hot
movie
dog.
theater I'll go to on Long Island. I don't want to say the name of it into this microphone because it's empty every time
it's a
I
hidden
go.
gem.
I don't know how it's in business, honestly. It's the only one I will go to. And when you go there, you look around and you're like, how is this still here? Year after year, it's still there.
But why is there 30 minutes of previews? Don't tell me this.
There's only at IMAX. At my local theater, it's 10 minutes.
I like the previews. And if you
It's
go
too long.
and if you go to IMAX, you have an assigned seat. What do you care?
Well, I love
Walk
the
in
assigned
20 minutes
seat, yeah,
late.
because I used to be the guy who would go to the midnight showing, wait there for 4 hours.
All right, so movies are back.
Movies are back.
And you're going to see a movie that might be a favorite of yours next week.
No, it's going to be good.
You think so?
Yeah, it's going to be good.
Well, when was the first one?
97?
Okay.
Paxton,
Helen Hunt?
Right? Helen Hunt.
Bill Paxton, rest in
Bill
peace.
Paxton, Yeah.
Philip Seymour Hoffman.
So what's this movie
Oh, that's
about? Their
right.
grandkids are now chasing hurricanes?
I'm just there for the
All right.
tornadoes.
Dude, I'm with you. I wanted to give a shout out to the city of Newport, Rhode Island. I spent about, I would say, 28 hours there, which is a really long time for me.
Yeah.
Maybe slightly less. We stayed over. What a beautiful place. Have you ever been there?
Newport, my sister got married there.
Okay,
Yeah.
so you have.
Yes.
Destination wedding?
Another
What's
destination
with you
wedding.
guys?
We're bringing
What's with these zones?
I don't know. It's just
You guys
pressure,
don't have any catering halls nearby?
pressure from the parents.
So Newport is beautiful.
It's
and
nice.
There's like Thames Street, which is all the shops and ice cream parlors and everything.
Yeah.
And then there's the Mansion Walk,
Yeah, it's
the
fancy.
Cliff Walk. That's pretty
Very-
cool.
Very fancy.
So you look at these houses and it's just unimaginable. them ever building anything that looks like that right now. And they were all owned by old industrialists, like from the early 1900s.
They filmed True Lies in one of those.
Oh, is that right?
In Rosecliff?
Yeah, the
Did you
Rosecliff.
listen to Rewatchables?
No.
True Lies this week? Oh, my
no, I
God.
should.
Oh,
Great movie.
Yeah, the Rosecliff
One of
is
the best.
there. There's something called Marble Hall or something.
The Marble House.
What is it? The Marble House? All right. Who owned that? Is that Rockefeller?
I'm not sure.
Okay. There's like 15 or 20 of these, just
They're beautiful.
insane, but they're all on the cliff overlooking the Atlantic Ocean. So that's a really cool thing to do. And then the restaurants are all great in Newport. Like every meal we had was banging.
Lobster roll.
We ended at this place called the Inn at Castle Hill, which like overlooks the water, and there's just sailboats going by, and they have like these giant field filled with Adirondack chairs, and you could just sit there sipping a drink, watching boats go by. It's pretty great.
Not
So
bad.
shout out to Newport. Shout out to all the Ritholtz Wealth people up in Newport. We appreciate you. Hey, everybody. Thanks so much for listening this week. Thanks for all the support for the show. Big thanks to Todd Sohn. Todd, I want people to follow you on LinkedIn. You're linkedin.com/Todd Sohn, SOHN. You're on Twitter, Todd_Sohn. And the website is strategasasset.com to learn more about what Strategas does. Did we cover all the bases?
Excellent.
You're
Yeah.
the best. Thank you so much for coming, Seth Rogen. Great to have you too. Great job this week. John, Duncan, thank you guys so much for everything. Daniel, great job. Nicole, Graham, Rob, special guest today in studio. Connor Passarella? What a visit for you. You got to see Todd Sohn. All right. Hey guys, thank you so much for listening. Thanks for the ratings and reviews, and we'll see you next time. All right, let's go.